and welcome to Web3 Unfiltered, the podcast where we move beyond the hype cycles and explore the real mechanics shaping decentralized systems, digital markets, and the future of financial infrastructure. I am your host, Collins Victory Odabi. For most of modern history, financial education has followed a fairly predictable script. You earn income, you save a portion of it, and eventually you invest in a set of well-understood assets, stocks, real estate, retirement funds, and maybe a small business if you're entrepreneurial. Wealth building in that model is largely linear and long-term. But the financial landscape is changing. Today's generation is growing up in a world where digital ownership exists alongside traditional assets, cryptocurrencies, tokenized assets, global online markets, creator economies, and decentralized and financial tools. They are introducing entirely new ways for individuals to participate in economic systems. So entry are lower in some cases, but the complexity is also significantly higher. But then that raises an important question. If the financial system itself is evolving, how should we be teaching the next generation about money? Our guest today has been thinking deeply about that question. He is Chandler Walker, a father, entrepreneur, and the creator of Culture of Care, a fast-growing newsletter focused on helping parents raise smart money kids and build generational wealth within the family. After scaling multiple seven-figure companies and coaching thousands of founders, Chandler shifted his attention towards something closer to home, helping parents understand and introduce their children to real financial decision-making early in life. His approach isn't about abstract financial theory. It's about practical exposure, letting kids see how money works, how investments are made, and how wealth compounds over time. Chandler, welcome to Web3 Unfiltered. How are you doing today?
Doing well. Good to be here. Thanks for having me.
You are very welcome. You're very welcome. It's a very good pleasure to have you on the show with us. So Chandler, I like to ask my guests first to talk about themselves, to give a background on how they got involved or how they got started with what they're doing today. So what is your story? How did you start?
Yeah, good question. So I started off with a gym. I was going to med school and I kind of got disenfranchised by the system. In the US, it was basically look at a big book, give someone medication, and then send them along their way. And I just felt like there was more to it. I felt like all we were doing was medicating and band-aiding problems. And I just wasn't I didn't really feel that. I didn't feel like that was the path that I needed to be on. So I broke off from that path and I opened up my gym. In that gym, we called it Stone Age Fuel, and we focused on 6 pillars of wellness. So it was mental health, social health, sleep, nutrition, fitness, and habits. And we were able to take what I couldn't do on the med school side and put it into play on the gym side. And we were able to actually help people in a holistic way that could give them lifetime results. And during that period when I had the gym, that was when I first was exposed to stocks and crypto and all of that side of things. And that's really where I took a little bit of my profits and I put them on the stock side. I bought Ethereum right when it ICO'd, so it was like $15 a coin. And that's really where everything kind of went going from there.
Interesting. You met Ethereum at $15 a coin, and that was a very, very huge opportunity for you. I'm sure you are smiling right now with your portfolio. So, Chandler, for most people, financial literacy doesn't arrive early in life. It tends to show up later, often through trial and error, mistakes, or the realization that nobody really explained how money works. Schools they rarely prioritize it, and financial institutions often communicate in ways that feel inaccessible to ordinary people. As a result, many adults reach their 30s or 40s still trying to untangle basic financial concepts that could have been introduced much earlier. Your work suggests that the real center of financial education isn't the classroom or bank, it's the household. So Chandler, what led you to shift your focus towards helping parents teach their children about money rather than focusing solely on adults' financial education?
Yeah, I think one of the problems that we run into as parents and as adults, because I was the same way. I grew up and I didn't learn about money. I think I had an accounting class in college, and even in business school, there was basic business style courses, but there was nothing about wealth generation. There was nothing about protection of assets. There was nothing about how you pass on wealth and how to teach generations to keep that wealth. A lot of people can argue that there's things like a trust that can be created, which is great, but then generations still lose all their money within the next couple of generations, even with the trust, because it's not an operating system for how you can structure something moving forward. And so what I started to do was I started to build a family office for myself. And typically these family offices are only reserved for people who are ultra wealthy. They have a minimum of a $10 million net worth or more. And it's an army of lawyers, CPAs, and pretty much everything you can think of that organizes their entire financial system. And the key word there is system. These people aren't making crazy moves. They're not doing anything off the cuff. They're not making emotional decisions. They have a system that's mapped out and defined. And when those definitions show themselves and present, that's when they make moves. And so I started to think, if something happened to me, could my daughter or could my wife take that up and just immediately use it, immediately know when to deploy it, immediately know when protection needs to come into play, and ultimately be able to keep that wealth without losing it over a generation? And initially my answer was no. And so that led me on a pathway of, okay, how can I create this family office structure without an army of lawyers, without CPAs, without all these different people that a traditional family office would have? And so I took it and I whittled it down and I used AI and I created my family office structure that centers around growth, protection, and ultimately a little bit of risk. And from that, every single piece of that is defined and organized into what, if, when, where, and how. And from that, my daughter could even pick it up and know exactly what to do, exactly when to deploy, and exactly how to save the wealth that I could pass on to her.
One very interesting thing, from what you said, I could relate perfectly well. One very interesting pattern across families is that money tends to be treated as a private or even uncomfortable topic. Parents may work hard to provide for their children, but discussions about income, investing, and financial decision-making often happens behind closed doors. That silence can unintentionally leave children with very little context about how financial systems actually function. From what you've seen working with families, what are the most common mistakes parents make when they first try to introduce their kids to money?
Yeah, good question. I think most parents have good intentions, but I think the problem that parents run into is they assume that their kids are too young to understand financial concepts. So they assume kids are too young to understand buying and selling stocks. They assume kids are too young to understand what savings means and ultimately how to generate the best return via savings. They assume that kids don't necessarily have the mental know-how to really organize the financial understanding of where things go. And so when I look at families and when we're working with people, we organize it into, okay, well, we have a child. This child can learn to invest. How does this child learn to invest? Well, we take it and we create concepts with companies they already know. For example, my daughter knows Roblox. And so we started buying Roblox when it was brand new, when people still call it this fictional game that was worthless. But we saw the fact that she played it. We saw the fact that the younger generation played it and she believed in it and she liked it. So I taught her the concept of we put money in, we don't look at it again, we don't look at the ups and downs, we check it once a month to see where it's at. And ultimately that's long-term investing that you're teaching your child. Take something you believe in, work to develop an understanding of what that company is and does. And if from that your structure determines that there's something that company can produce for you long-term, you deploy assets. So I said that a lot more complicated versus how I said it initially when I was teaching her how to do it. Another thing, savings and loans. People assume kids can't understand loans. But with my daughter, she earns points every week for her good behavior, her sports, and all the stuff she's doing. She can take those points and she can cash those points in to get toys or whatever it is she wants to buy. If she doesn't have enough points, she can also take a loan out against those points with an interest rate that she has to pay back over time by accumulating more points. So she's learning and understanding the concepts of taking out loans, paying interest, borrowing when you don't have anything, borrowing too much. And it ultimately teaches her how to be safe and keep a steady financial system.
Interesting story about how you taught your daughter. I believe she was 6 when you taught her how to choose and buy her first stock. Now, on the surface, that might sound like a small experiment, but it actually touches something deeper. The idea that children can begin understanding ownership much earlier than most adults assume. Instead of money being something abstract, it's become something tangible and participatory. What did that experience teach you about how children naturally understand concepts like ownership, investment, and value?
I think one thing that I've learned from my daughter in these experiences is children are absolutely brilliant in their capability to understand and execute simplicity. They'll take a concept that as an adult, it takes us 45 minutes to explain and that we don't understand, and they'll whittle it down to the most simplistic, sometimes interesting explanation that you've ever heard, but it's something that absolutely works every single time. And I don't think as parents we give children enough credit for how incredibly simplistic they can create and understand and turn complex problems into.
Well done on teaching your child how to buy a stock. I'm sure she'll have you to thank for that for the rest of her life. Now, for decades, the structure of wealth building has been relatively stable. People accumulated capital through employment or business ownership, and then they placed that capital into long-term investment vehicles such as equities or real estate. But today's financial environment is far more dynamic. Online platforms allow individuals to invest, trade, and build income streams globally. Digital assets introduce entirely new models of ownership. Even younger participants are increasingly exposed to financial tools through technology. That shift raises an important question. Are the principles of wealth building changing, or are we simply witnessing new tools built on top of old ideas? From your perspective, Chandler, are the core principles of wealth building evolving, or is the framework largely the same while the instruments are changing?
Yeah, good question. I think one of the things that we're starting to experience isn't necessarily the concept of wealth building changing, but we're starting to experience the atmosphere of retail traders becoming more and more involved and more aware of how the markets work, and the retail traders have the capabilities to be able to enter the markets the same way as a lot of the institutional systems that have operated for decades have been able to. And I think when you look at something like the GME rush and crash, that was one of the concepts of retail traders really taking things by storm. And when you look at crypto in the early days, crypto was early adopted by retail traders, and it's become more and more since institutionalized. But I think overall, when we look at the concept of wealth, and when I look at the concept of wealth, we take our operating system, like the family operating system that I have, and we want to still organize this whole ecosystem into our buckets: protection, growth, and speculation. Ultimately, you can still take the traditional markets, put them into those three, the crypto markets, put them into those three, and ultimately organize Web3 to fit into those. Some examples for that is, say I can get 6% APY or 7% off of my US dollar coin simply sitting in Coinbase. Well, it makes sense to put some of my protected assets, i.e. something that's not going to change much, into that, because it gives me the opportunity to earn wealth without much risk. But on the other end, say there's some protocol in Web3 that's offering 200% interest. Now that's highly speculative. That's going to go in my speculative aspect, and I'm going to consider that pretty much gone the second I invest in it. Speculation exists on both sides. We just have to learn how to hone in speculation, because at this point, with the introduction of Web3, it's a lot easier to lose a lot of money and go unhinged on the speculative side.
Amazing, Chandler. Another major shift is the idea of digital ownership. In the past, ownership usually meant something physical or easily defined: property, shares in a company or a business. But today, younger generations are encountering new forms of ownership that exist purely in digital environments: online platforms, tokenized assets, and decentralized networks where value is created and exchanged without traditional intermediaries. And there's also a broader generational shift coming up. Previous generations often encountered financial markets relatively late in life. Today, exposure to markets can begin much earlier through apps, online communities, and digital platforms. That earlier exposure can be empowering, but it can also create confusion if young people don't have a clear framework for understanding risk, value, and long-term thinking. So, Chandler, do you think children growing up today have fundamentally different financial opportunities compared to previous generations?
Yeah, that's a good question. I think children growing up today have more financial opportunities because there's more access available for them to be able to get in. We have apps like Robinhood, we have apps like Webull, we have Kalshi, and stuff like that, I think, is giving people the opportunity to get into the broader markets a lot quicker. And it's also giving them the opportunity to lose money a lot quicker. And so I think what we're experiencing right now is younger people are entering the markets and losing money faster than they thought possible. And so they're starting to learn that maybe it's not all about intensive speculation. And ultimately, what I think that's going to do is it's going to force more young people to organize their financial assets and their financial structure into a system. And I, again, argue that they should be looking at what's growth long-term, what's speculation short-term, and then what's my protected level of assets. I think ultimately we're going to see that become more and more important and more popular as people start losing more and more money with unlimited access to these markets. And I think as we see the broader government, we're starting to get more deregulation focused on markets like the sports betting, like the crypto markets, and like the prediction markets.
Now, talking about long term, the idea of generational wealth, let's talk about that. The idea of generational wealth has historically centered on transferring assets across generations, like property, businesses, investment portfolios, and sometimes family enterprises that last for decades. But the composition of wealth itself may be changing, just like we've established earlier. As digital assets and decentralized networks expand, entirely new asset classes are emerging. Some people see these systems as speculative environments, while others see them as foundational infrastructure for the future economy. Either ways, the conversation about generational wealth is likely to look very different in the next 20 years. When you think about generational wealth in the coming decades, do you expect the structure of that wealth to look radically different from what we've seen historically?
I think what we're probably going to start seeing is younger people getting more savvy and aware of wealth systems. Because ultimately, I think right now, when we say generational wealth, what we sometimes think is it's someone who makes a bunch of money and is able to pass that on to future generations. But the problem with that generational wealth now, and unless you're in the class of the ultra wealthy and your net worth is 10 million plus, most people lose that wealth within 2 to 3 generations because there's no system or no structure behind that wealth. And so what I think we're going to start to see is we're going to see more financial operating systems that describe and define what happens with that wealth generationally and leaves that as an operating system for future generations to be able to use and execute. And I think part of that will be AI systems that are able to essentially systematically organize, filter, and adjust and modify and manage these systems for individuals as we get farther and farther along in the world of AI. And so I think the future is going to be less about, oh, you have a trust, you're good, and more about, okay, well, you have a trust, that's not quite going to be everything you need. You're still going to lose all that money when you pass it on to the generations with the trust. So what you're going to need is this financial family office style operating system that's going to teach them how to use it and how to continue to make that wealth so more and more generations can enjoy it.
So basically, it's about creating repeatable systems that these kids can copy and utilize in their day-to-day lives, and they can pass on from generation to generations. That will help them to sustain that wealth or the generational wealth that they've accrued. That's very interesting. Now, digital assets, including cryptocurrencies and other blockchain-based assets, are often discussed in terms of speculation, but they also represent a broader idea financial systems that operate outside traditional institutional frameworks. For families trying to build long-term wealth, that creates both opportunity and uncertainty. Do you think parents should start introducing their kids or their children to digital assets alongside more traditional investments?
Yeah, for sure. And I can tell you some examples from my daughter. She has a Bitcoin. And when we bought the Bitcoin, I explained to her that in our family office system, the Bitcoin represents our long-term, our growth asset that's going to be there long-term. It's probably going to be okay. It's something we don't touch, but she has it there. Then in the crypto side of things, I told her, okay, what's another thing you like? And she found Uniswap, the unicorn coin. Oh, that's the unicorn. That's cool. And so then my conversation with her on that is, okay, well, that's speculative. And what speculative means is whatever we put into that will probably go to zero. But if it doesn't, it's probably going to give us a better return than that Bitcoin. So that's a big risk we take because we want that one little thing. So now she understands, okay, I have the Bitcoin. That's pretty safe. That's going to last me a long time. I can keep that over there. But I think this Uniswap coin over here is pretty cool. Like, it has a freaking unicorn. But I also know that might go to zero and it might not return anything. But it could also be huge. So that can be part of my speculative bucket. So my daughter at 6 years old, she's 7 now, understands Bitcoin is a long-term, quote unquote, safe asset that goes in our growth realm. But Uniswap, unicorn coin, goes into our speculative realm. And she's aware that one might go to zero. So she's also aware you put a majority of the funds that you would be willing to invest into something like Bitcoin and a small minority into something like Uniswap.
I found it interesting how she loved Uniswap coin. I think it's just because of the unicorn, and being a little girl, she would find the unicorn enticing or interesting to interact with. Well, do you think she chose the Uniswap coin because of the unicorn logo, or what do you think?
Oh yeah, it was 100% because of the unicorn logo. And so she was like, oh, it's a cute. She liked unicorn, Uniswap, and then she liked polka dot because it has the polka dots and the name's polka dot. So the names are kind of cool and they entice kids in. So then that's when that speculative argument comes into play. And it's like, okay, this is what it does. This is blah, blah, blah. I showed her how Uniswap works and she knows you can trade coins and stuff with it. But she's also aware it's super speculative. And so I think it's interesting in the way that those coins are labeled because they do attract kids with just simply the way they look.
Yes. And of course, one concern parents often have is risk. Emerging financial technologies can move very quickly, but they sometimes attract speculative behavior that may not be appropriate for young learners. At the same time, ignoring these systems entirely may leave the next generation unprepared for the financial realities they will eventually face. Now, Chandler, how do you think parents can introduce children to new financial technologies while still maintaining a responsible and long-term mindset?
Yeah, I think the biggest thing that parents aren't doing is creating their own family operating system, like I've discussed a little bit, because when parents look at these speculative assets, typically they don't even have their own speculative assets organized. They don't have their own growth and protection buckets built. They don't have an operating system for themselves. And so I think the biggest mistake, and this isn't a shot at parents, it's just lack of understanding at a generational level of financial instruments and how to organize those into a system that makes sense for your portfolio long term, and then take that system and teach that system to your child. So if you get hit by a bus tomorrow, your kid can pick it up and operate that system, even at 6 or 7 years old. They understand what to do, what not to do, what decisions to make, and they can get the appropriate help to make sure that they're able to handle that long term. And so I think as parents are trying to introduce kids to speculative systems, you have a simple conversation with them. Like my daughter with Uniswap, like, yeah, the unicorn's cool. This is a speculative thing though. So if you put $100 into it, that could turn into $0. Or it could turn into $10,000, but you can expect that it goes to zero. And that's what we should plan on for these speculative buckets. There's another thing that we started playing a little bit. It was this game, Decentralized. We would get on and play the game, and then I would tell her, look, this game is operated by a currency called mana. And that currency is super speculative. You can buy in-game stuff and all that. The currency has value, but it's just like unicorn coin. It's probably going to go to zero. The game's fun, but it also doesn't It's not global. It's not this massive thing like Roblox. It's kind of like a wannabe Roblox universe. So if you buy into that, you just know that that's probably going to be worthless as well. And that goes in your speculative bucket. So she knows most of her money goes into growth and protection, and a small minority goes into speculation. And she can define what speculation means versus what growth means versus what protection means.
Thank you so much for the perfect breakdown. And I understand you perfectly well. Another reality is parents feel uncertain about their own financial knowledge. You're able to teach your daughter about decentralized and so many other platforms because you had that knowledge. But then if someone grew up without strong financial guidance themselves, teaching those concepts to children can feel intimidating. But in many cases, financial education doesn't require perfect knowledge. Yeah, it requires curiosity, transparency, and a willingness to learn together. But then now, let's look at some cases for parents who are still trying to figure out their own finances. What is the best way for them to begin teaching their children about money?
Yeah, I think if parents don't know their own finances, or they haven't figured out ultimately what they're doing with their own finances, it becomes incredibly challenging to teach that to their kids because they don't really understand what they're talking about. And so I think as parents, the easiest thing you can do is organize what you're even doing. Write down all of your assets. And then next to it, write down why you have that. What's the meaning behind that asset? If you have to write more than one sentence, you don't understand that asset or what you're doing with it. So I think everything you wrote down that you don't understand, you need to get into and investigate and understand, because this is your financial future that you're dabbling in, basically, or that you're jumping into eyes closed. And I think for parents, it's an incredibly useful exercise because you'll ultimately write down all the things you have, what the purpose behind that thing is, and ultimately what it's for. And that tells you everything. Most people cannot do that in one sentence. They'll write a whole paragraph about this and that, and I heard about this, and I bought it because of that, and then it's just this whole mess and this hodgepodge.
Interesting, Chandler. From everything you said so far, I think one of the most powerful ideas in your approach is that children learn best through participation. Instead of hearing lectures about money, they see decisions being made and gradually become involved in those decisions. That transforms financial education from something theoretical to something experiential. Another challenge is engagement. Chandler, if financial education feels rigid or overly technical, children quickly lose interest. But if it feels interactive, even playful, curiosity tends to take over. And that's where creativity becomes very important. So let's, I think we'll be running up this episode now. I have one more question before we wrap it up. So looking ahead, the economic environment that today's children will inherit is likely to be very different from the ones their parents grew up in. Digital infrastructure, global online markets, decentralized networks, and automated financial tools are reshaping how value is created and exchanged. In many ways, we're watching the financial system itself evolve. Preparing the next generation for that environment will require more than simply teaching them about saving or how to save. So, Chandler, finally, what financial skill do you believe will matter most for children growing up in the next 20 years?
I think the most important system that kids can learn will be systems, to have a systems mindset, to be able to define exactly what they're doing with their money, why they're doing it, and ultimately where that leads them long term. If you ask most adults, they can't do that right now. If you ask most kids, they have no idea because nobody's teaching them. But they should say, oh, I want to buy this. Okay, why? What's the purpose of this asset? Why are you buying it? Because I think it looks cool. Okay, well, when you say look cool, where does that lead you? I don't know. All right, don't buy it. You have no idea what you're doing. You have no clue what you're buying into, and ultimately you're going to get yourself in trouble for buying dumb things. So I think the most important thing that we don't have in the wealth world, which is surprising sometimes, is this systems mindset. What are you doing? Why are you doing it? And where does it lead? If you can't answer those questions, you have no business buying it. And I think ultimately that's not being able to answer these questions It's what gets people in trouble in Web3. It's what gets people in trouble buying things during a craze. It's what builds FOMO. Because if you don't have your systems in check and your logic in order, when emotion comes out, everything's over.
That is absolutely spot on. You hit the nail on the head, and that's amazing. It's one of the major problems we have in Web3. That is for sure. Chandler, do you have any final notes for our listeners before we wrap up the episode?
Yeah, I think the biggest thing that people listening can do to build not only their own wealth, but the wealth of their kids, and to ultimately hopefully see this last generationally, is to have that systems mindset. Be able to define every one of your assets, then ask yourself, why did I buy this, or why am I going to buy this? Where does it lead? And ultimately, what's the purpose? If you can answer those questions, it puts you in a lot better position to build your own family office system like I have for my daughter. And if anyone listening is interested, I put together a private briefing that basically describes my entire family office. All you have to do is DM me on Instagram. My Instagram's Chandler, CHANDLER _SAF. And just DM me the word private, and I'll send you over the briefing.
Interesting. I will be sure to add your Instagram handle to the show notes so our listeners can DM you. Thank you so much for the amazing session tonight, Chandler. It's perfect. You've talked about systems and how parents can establish these systems and teach their kids to sustain the knowledge they are accumulating right now, and apply them and transfer them over the next 20 years. It is absolutely amazing. So as financial systems are evolving, the importance of financial literacy only increases. Now, for families raising the next generation, teaching children about money may become one of the most important long-term investments they can make. Whether the assets involved are traditional investments, digital assets, or entirely new forms of ownership, the underlying principle remains the same. Understanding value, managing risk, and thinking long-term is very, very, they're very, very important. Chandler Walker, thank you so much for joining me on Web3 Unfiltered. And to everyone listening, until next time, stay sharp, stay curious, and keep building.